Hey, it's Matt here from Pro West Finance. Today I'd like to talk to you a little bit about a topic which is quite often spoken about in the media, and that's inflation. Inflation is one of those things that a lot of people really struggle to understand how inflation impacts interest rates. The inflation is not directly linked to interest rates, but interest rates are a tool that the government uses to impact inflation. Inflation is when the economy is going too fast, is the spending is too high, and obviously that has a bigger impact on the broader economy. Interest rates is one of those things that when the inflation is too high, they raise interest rates to then bring the inflation back down again. And as we can see through the years and through the cycles, interest rates has had a massive impact on the way that inflation has moved up or down again. And certainly, as interest rates continue to be pushed up, the inflation number will start to come down. So it's one of those things really that people look at the RBA bank rate and they think, well, that's directly linked to an interest rate that they would get from their bank. That's kind of true, but not 100% true. I guess the reality is the money that the banks lend out is kind of linked to the RBA rate, but also too has a lot of stuff going on in the background in terms of their cost of funds and their borrowing and the cash that they have available to lend out. So it's not a direct link that the bank rate will link to the RBA rate, but the banks will reduce their rates when the RBA reduces and obviously counter when the interest rates go up with the RBA. But it's not true to say that the RBA rate will have a direct impact on the bank rates of the day. My name's Matt, 0459 836 916, prowestfs.com.au.